Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. Are we out of the woods yet? I mean, last we checked, Russia supposedly is moving away from the border of Ukraine, and the January Fed meeting minutes, well, it seems like it was really a nothing burger. There's nothing too hawkish, nothing too dovish, nothing that we weren't expecting. So are we out of the woods? Is it clear sail moving forward with the stock market, with Tesla? I'm just an engineer, so keep in mind, none of this is financial advice, but I'll give you my opinion. So before we get into it, do me a favor, hit the like button, hit the subscribe button, ring that bell, and let's get into it. Let's start off by taking a look at Tesla's chart and mapping out all the macro moves and everything that happened today to the stock, and to see how much of the movement and the price action has to do with Tesla and how much has to do with what's going on with the world. So here we can see today's action. Okay, yesterday we all saw the big momentum up about 4 to 5% increase, and all of that was on the backs of the rumor, the notion that Russia was starting to withdraw troops from the border of Ukraine. Okay, so we understand that, right? That was completely macro driven, but so has all of the downside with Tesla so far. So let's take a look at this here. Okay, so at the beginning of the day, we started off okay, right? We were fine, nothing too crazy, a little bit of giving back, but we expect that after a big run, no matter what. But then we saw everything, the whole market start to drop as the day went on, right? Okay, so about call it around noontime, we saw the entire market just start to dip on the rumors that Russia really hasn't been pulling troops away from Ukraine. So according to NATO, Russia's actually adding even more troops to the border. So we don't really know what's happening there, right? There's a lot of uncertainty there. And why does that matter, right? In the big scheme of things, the U.S. is not going to go to, war, at least not in a traditional sense, with Russia over Ukraine. It's not going to happen. Ukraine's not part of NATO. Ukraine is an ally, but not to that level. So what would happen? Well, what would probably happen is that we would put extraordinary sanctions on Russia. And what happens with that? Well, that means oil prices are going to shoot up. And what happens when oil prices shoot up? Well, that means inflation goes up. Why? Because energy is such a huge part of the CPI index. And so all of this really has these other triggers, these domino effects that occur massively. Now, that hurts us, that hurts all of the West, but it also hurts Russia. Keep in mind, 90% of all of Russia's GDP revenue, everything that they use to sustain as a country, has to do with oil. So they need to make sure that they have the pipelines open and flowing to Germany, to Europe in general, because that's where they send most of their oil. Now, a lot of this, you might be thinking, is Putin doing this intentionally to raise the price of oil because that benefits them. However, keep in mind, it's a double-edged sword. As prices go up, the United States starts to wake up. All of the shale fracking, all of those companies, the companies you don't know of, right? I'm not talking about BP, Shell, Exxon, okay? There are hundreds and hundreds of these smaller shale companies that will pop up. They just need 1 or 2 rigs. They hire some people back, and all of a sudden they start flooding the market with more oil from fracking. Why does this happen as prices go up? Well, because what they really need is about a $60 to $70 a barrel to break even. So if they can break even, and if we're staying up in the 90s, even the hundreds for a sustainable period of time, well, they're going to come back. Now, they've been hurt by this before, thinking that things would be okay. But if we see a sustained high price of oil, well, you better believe they're going to come back, and that'll have a drastic impact on Russia. So it's not like Russia can do whatever they want and not have any effects on them. And keep in mind, the Russian people do not want to go to war. They don't want to deal with this. They already have a huge economic issue in Russia. I mean, they always have. But the point is, it's a lose-lose situation for everybody, for the Ukraine, for the West, for Russia. The only one this might benefit would be China. And the only reason I say that is because maybe China could see this as a proxy or a beta test to see what would happen if China decided to go ahead and impose its will on Taiwan or into Hong Kong. So China, in my opinion, is the only one that could even benefit from this, and just to see how the world reacts. Not saying that that's the plan here, but it is something to think about. Okay, so that's that drama, okay? And honestly, that drama, we can't control it. We can't do anything about it, right? That's completely, that's on another level. That's got so many other things going on. But at the moment, things seem to be steady, and I think that's what we have to, kind of rest our head on and just hope that that all works itself out. Hopefully, we remain in a peaceful world, and people decide not to go to war. All right, now let's talk about what happened today with the Fed meeting. So at 2:00, the minutes from the January meeting came out, and during this meeting, we heard a lot of the things we already knew. Okay, we knew that they're going to continue tightening, and they're going to accelerate their tightening. That there's a strong likelihood of a rate hike in March, if not a certainty. And there's really nothing in the minutes that we didn't expect, and that's what the market wants from the Fed. That is. If you want to know when we're going to be out of the woods with all of the drama with the Fed right now, at least when it comes to interest rates, it's going to be whenever they forecast what their plan's going to be, right? If the Fed were to tell us, okay, we are committing to, say, 6 rate hikes over the next, 1 year and a half, and it's going to be a 25 basis point each time, and that's what we're going to do, and we're going to see what happens after we've done all 6, the market would probably rally on that news just because they know what's going on. Right now, there's all kinds of fear. Okay, you have certain Fed members like Bullard coming out talking about a 1% rate hike by July. You have other people say, no, we need to be at 25%. You have Jerome Powell still kind of on the fence and wanting to see what happens, wanting to wait till March before he actually says anything. So all this uncertainty, the market does not like. So what we really want to see is twofold. One, the Fed to come out and kind of give a actual timeline of when rates are going to go up and by what amount, right? Even if he were to say, hey, the next 4 rate hikes are going to be 25 basis points, and then we'll reassess from there. Maybe after that, we have to go to a 50 basis point rate hike, but that would give us at least a guidance of what's to come. The other important factor, because this is really a two-sided coin that has to happen for the market really to feel extremely comfortable moving forward to kind of continue on this bullish run this bull run we've been seeing over the last few years. But the other side of the coin is we need to start seeing a slowdown in inflation. Okay, inflation keeps rising and rising and rising. We have to find a top, and not just a top, but we need to kind of neutralize what we're doing so that then whatever the Fed is doing can actually have an effect, right? What we essentially want to do is, slow down the demand out there, allow the supply to catch up, allow all of the suppliers, the factories, the foundries for chips, to allow everything to sort of catch up. Right, a perfect example right now is with home buyers. Right, home buyers saw, I think it was a 10% drop month over month. But here's the big issue. There's so much excess demand that 10% drop really doesn't even move the needle right now. And I don't know if you've seen the price of lumber, but even that has shot up recently. So we need to see guidance from the Fed to let us know what they're thinking, what their plan is, at least a year out. That would be preferable. We probably won't get it, but that'd be preferable. And then the other side is we need to start seeing some neutral movement when it comes to inflation. Now, until all this happens, I would say we're not out of the woods. Okay, today with Tesla, we are on good footing. As you can see here, we're at 9.23 to the market close, down a little bit in after hours, but we made a nice gain we from where we were earlier today, right? But the point is, none of this is Tesla itself, right? The company is still sound. Nothing's changed from the company fundamentally. All the movements we see, not just in Tesla, but just in the market in general, are coming from the macro environment. So what could kind of knock Tesla out of this trajectory? Right now, everything is essentially trading along with all the indexes. So what could set Tesla apart? Well, Giga Austin opening, that could do it. Giga Berlin opening, actually having deliveries from Austin might do it. We also have numbers coming out from China, right? We just saw some recent numbers, essentially production of 70,000 and 60,000 for deliveries. Those are huge numbers. I mean, Giga Shanghai is on pace essentially to get to 1 million vehicles a year, especially with this expansion that's happening now. So look out for that. I mean, again, we heard from Zach on the earnings call that with just Shanghai and Fremont, they'll do 50% year over year easily. So if we add in Austin and Berlin to that, I mean, it's going to be, the numbers are going to be, just crazy. So that could be it. And then also keep in mind, come April, we'll get Q1 earnings. And this could be a bigger catalyst than what we expect, mainly because Elon Musk will not be on the call. All right. He has no reason to be on the call. There's no special message or anything. So he probably won't be on the call, which means Zach and Drew will handle it. And it'll be exactly what every analyst wants to hear. They'll be able to give maybe some massaging to what Elon said in Q4 that analysts didn't like. And they can, assure Wall Street of what they want to hear and give the messaging they want to hear. So really, the catalyst to break Tesla out of this funk of trading along with the indexes in the market and what's going on with the macro would be something along the lines of Austin, delivery numbers, Berlin, and then Q4 or Q1 earnings with a more predictable and I guess generic type conference call. And that's all Wall Street wants to see from Tesla. So that's what I see that we have to get to in order to kind of get out of the woods and get back into this, a bigger trajectory, bigger picture of the electric vehicle revolution and the movement, full self-driving, right? Get back on course, get back on track with all that. And if that happens, hey, maybe 2022 will turn around and actually be a pretty good year. All right, we're going to leave it there. I would be curious, your perspective. What are your thoughts? What do you think it's going to take to kind of get out of the woods, get out of this kind of craziness we've been into? Let me know down below in the comments. Also, don't forget, hit the like button, hit the subscribe button, ring that bell. I love you all. Peace.